Welcome, friends. My name is Avinash Gorakshekar, and I welcome all of you to another interesting episode of Konexio HighFlyers. Friends, in these episodes, we introduce to you emerging companies from emerging sectors and talk to them about their business models, their growth journeys, and their future prospects. And we also make it a point to introduce the company promoters to all of you so that all of us can understand their company's operations better. And today, friends, we have got a very interesting company by the name of Kontor Space Limited, and we have the privilege and the pleasure of having the managing director of the company, Kanan Kapur. Madam, it's a privilege for us to have you on the show, and I'm pretty confident that you'll be able to get a very good kind of input from your side, which will help all of us to understand your company's operations much better.
Thank you for having us, Avinash ji. We appreciate it and we look forward to this discussion with you.
Yeah. So, Kananji, first question is if you could tell us, your business journey. How did this business journey start? Because this is a very emerging growth business. In fact, we hear a lot of CoWork Spaces nowadays.
So, Kontor Space Private Limited started off in January 2018, and we started off with our flagship center, which is also our largest center in Thane, in Ashar IT Park. In fact, that was the time, when the likes of WeWork were coming into this space in India, and there was a lot of action and activity taking place then, and we smelt a good opportunity, and we were in fact the first people to enter Thane. That micro market was something that we saw huge opportunity, and we started off with the space over there, which is almost 29,000 square feet, and it has 730 seats. Subsequently, we started our center in Pune, which is spread over 11,000 square feet, and it has about 300 plus seats. In fact, we saw, so there was of course, there was slight slack during COVID, but that is something that overall, everybody felt in the industry. But post-COVID, we saw so much of traction happening that we started 3 other centers, one after the other. The one in Pune, which is in Vanavri, and our center in Fort, and then our center, the newest one, which is in BKC, which is in a landmark building called 1 BKC. So the 1 BKC center, in fact, is spread over about 4.5 to 5,000 square feet, and we have about 125 seats over here. And so the whole idea behind getting into this business was that of course we saw a lot of the startups emerging, the MSMEs, a lot of action happening in that space. Plus, interestingly, even the MNCs and a lot of the larger corporates thought that it was a very good idea to move into co-working spaces because it was a huge cost saving to them. Plus, with the kind of activity happening in the digitization space, the hybrid working model, and so much of traction happening in hiring in the tier 2 and tier 3 cities, which in fact are pretty much untapped. Those are markets that, where we are very, very keenly, we've got our eyes on. But yeah, I mean, that is just to give you, so our positioning as a player in this market is that we are a premium player providing affordable spaces. So we give all the best of services and amenity, a plethora of them, at very affordable prices.
So fine. I think, Kananji, one question which I wanted to ask you is that you mentioned about your co-work spaces at Thane, BKC, as well as other places. Totally, if you could tell me what is the total number of seats which currently the company has got. I mean, if you could give us a cumulative number, if that would be a little better for us to understand.
So currently we have about 1,200 odd seats in all, 1,250 approximately.
Kananji, tell me one thing. You have got 1,200 seats. What's the average utilization, and what's the kind of average, selling price per seat? Like, what's the normal average, which, at which rate? Because you've got BKC, you've got Thane, you've got other places. Obviously, BKC gets a better price. So on an
Absolutely.
Average, occupancy per seat, what could be the average, price per seat we could normally get?
So, Avinash, this I can't give you a simple, straight-jacketed answer for something like this. Although I can tell you in terms of efficiency, we try and do 25 to 30 square feet per seat. That is the way we operate. But Thane seats go at a different price. BKC is a premium area. Our fourth facility is a managed office space, which I will talk about later during our discussion. So that works in a different model altogether. So, like for example, I can just give you an average. Like Thane, for example, will go at about 9,000 rupees a seat, whereas BKC will go in the range of 38 to 40,000 rupees a seat. So, it's a very, it's not something which, you can't really put a straight number to it.
Okay. No, I think this is very clear. I think depending on the location, obviously the occupancy, realization is much better. Now tell us something on the real estate co-working space. This space has got significant traction ever since COVID happened. A lot of people, a lot of manufacturing companies, IT companies, startup companies, as you said, MSME companies are now looking at this as a new kind of format. Where you get the entire fit out, the office, the infrastructure all ready made. So, in your sense, over the next, say, 2 to 3 years, what is the kind of opportunity for growth in this segment? Is this segment going to see strong double-digit growth? And in terms of opportunity for a company like ours, what is the kind of strategy which our company plans to do to capitalize this opportunity?
Sure. So if we look at the overall commercial square footage, of office space pan India, we're looking at about 700 million square feet, of which at the moment only about 7% is in co-working, which is a very small number. We're talking about maybe just about 50 million. And these numbers maybe as of 2022, data is through various research reports which are out there in the market. Now, the kind of growth that is anticipated in this industry is anywhere between 15 to 20% year on year. And we see this happening consecutively for the next 5 years. That is what we envisage going forward. Simply because, there is so much hiring also happening in the tier 2 and tier 3 cities. So a lot of the global corporations, they are moving to these markets, the smaller cities, because it's a big cost saving factor. In fact, the larger companies end up saving anywhere between 20 to 25% moving into a co-working space. Plus, like I was mentioning earlier about our managed office setup. So in that business, what happens is a lot of companies, don't want to put the capex in terms of the fit outs, in terms of putting down the entire infrastructure for the office, even though they may have identified a space, but they don't want to go through that whole ordeal and they don't even want to block that kind of money. So that is where someone like, Kontor comes into the picture. That is what we are doing in our Ford facility. So we fit out everything. That is something that a cost that we incur. And we also take care of the housekeeping. We take care of, the entire admin facilities for the office. And it's like a ready to move in office for somebody to just come in, just come in, get your bag and start working your laptop and you're ready to go.
Understood. I think this is exactly what I wanted to know, Kananji. Now tell me, Kananji, in terms of, if you could share with us, some of your key customers, or maybe, what are the kind of active customers which you currently cater? Because, this is a growing business. You'll have got 1,200 seats. And the second question would be, what is the kind of incremental number of seats which, the company plans to add in the next, say, couple of years? If you could add, both these points and, please share the inputs.
So, Avinashi, I'm afraid because we are under NDA, I won't be able to really be vocal on the customer names, but I would be very happy to tell you that about 70% of our clients are MNCs, and about 30% of them are in the MSME and in the startup space. And we are still seeing a lot of action happening in that space. And we are also seeing a lot of growth in the MNC clientele, because more and more of them are moving. And not only that, so, because of the kind of inflow of money coming into India, a lot of the foreign companies, the immense multinationals, are looking at opening offices here, and for them, a co-working space is the best they can, get, because they don't have to
Understood.
personally get into any kind of the whole ordeal of doing a lease agreement, take all those fixed costs, all of that. So this is a far more easier model for them. So we see a lot of growth in that segment as well. I also want to add, to your second question, that in terms of addition of space, so now we are looking at two new centers. So the way we work is we just like we identified Thane as a excellent market. So there are two new micro markets that we have identified, and spaces also that we have identified. One of them is Andheri East, and one of them is Airoli. And there, we are looking at adding maybe 300 to 400 seats in each of the centers. Could be even up to 500 in each of the centers. So that is what is the additional numbers that we are looking at.
Okay. And technically, Kananji, when can we expect these numbers to be added? I think over the next 12, 15 months, is it possible?
Actually, Avinash, the whole idea, I know, maybe at some point you are going to ask me this question, but it's kind of connected to the question you're asking me, about the IPO. The idea behind the IPO itself is, because we see this as such a wonderful opportunity, and we think that the investors that come on board for us can really reap the fruits of this growing sector. The funds that we, get from the IPO are what we intend to invest in these two centers. So it takes about, 6 months for a center to get up and running. And I think before March of 2020, no, before September of 2024 is when we see them absolutely up and running and, in the money.
Okay, fine. Kananji, now since you have told me about the IPO, if you could just share some brief details on the IPO, what is the size of the IPO, and what is the kind of, apart from the two centers, are you also looking to fund some working capital from the IPO proceeds? If you could share the details with us.
Well, actually, our business is not very largely working capital intensive, because we get a deposit, our rents are paid upfront. So we don't have the working capital pressure on our business. So the major investment, in fact, 80% of the proceeds from the IPO would be invested into these two centers, and 20% would be for general corporate purposes, just as a buffer. Okay. We are actually the intention is to maximize on the investment into the business itself, because the scalability is the name of the game. The more we scale the business up, the fact that currently FY 22-23 we did a 9.17 crore of a top line, and we had a 1.87 crores of PAT. So we're looking at a 20% net margin here. And even after this capex that happens, although there will be a gestation time of 6 months, because that is the time that goes into fit outs, and that is the time that goes into get the center full and up and running. We are looking at the funds coming in and the business, the numbers going up from within 6 months.
Kananji, now one thing I wanted to understand, I was observing your prospectus and your presentation. Our business enjoys very high operating margins. Almost 43% was your operating margin, and now you're saying you will comfortably have 20% net margins. So these margins, without projecting any number, just wanted to know, will these margins be sustained over the next couple of years as you scale up your seats going forward?
So absolutely. I mean, maybe not 20%. The more we scale up, we are definitely looking at a 17 to 18% of a net margin, because there would be some incremental admin costs which will go up. because if we scale up, if we look at the numbers, if we look at taking 1,200 seats to 2,400 seats and subsequently increasing them even more, even though the admin costs would be shared between the centers, but there would be certain fixed costs which would go up. But
Okay.
having said that, there wouldn't be that great a difference, in the incremental. Yeah.
No, fine. I think, Kananji, now one simple question about the business. Like, you all have been in the business for a long time. You all have got 1,200 seats. You all are adding more seats now. Tell me one thing. What is the differentiating factor as far as Kontor Space is concerned? Like, what do you bring value on the table? What kind of value do you offer customers that they come to you, they get service? You also obviously benefit by their presence. So, if you could give us some qualitative points, which could tell us that, okay, Kontor Space is doing a much better job, at least, qualitatively, that is why the customer comes to you. So, 2-3 points which could make us understand your qualitative positives in a much better way.
I think the biggest thing that we provide is a very personalized service to our customers, which kind of makes them feel very much at home and extremely comfortable. So we, even build to suit depending on the customer requirement. So the overall customer satisfaction levels have been extremely high with us. And the kind of retention that we've seen of our clients has also been great. We've seen renewals
Yeah.
happening year on year. And those are the things that kind of encourage us to move into this direction.
Okay. And typically, Kananji, tell me one thing. Normally, when you get your new, tenants on board for CoWork Spaces, normally these agreements are there for what, 2 to 3 years or little over 3 years? What's the kind of average duration the tenant comes in like?
So it could be anywhere between as less as 6 months, and it could also be as high as 5 years. It really varies.
Okay.
Especially in managed office and places where we have incurred additional costs for our customers. That is the time, where we take longer lock-ins, because that's the kind of capital investment that's gone into the business.
Yeah. Okay. So basically, typically, it could range anywhere between say 2 to 3 years or even longer, depending on the
That's
requirements
right.
of the customer. Okay.
Absolutely.
Okay. Okay. Now, Kananji, since you have set up the company, you all have brought the company up to this level. Now you all are planning to go public. A very simple question, for a longer term investor, what is the kind of message you'd like to give? Because you all are hitting the capital market for the first time. You all will have a lot of external new shareholders in your shareholder family now. So, on a broader basis,
Absolutely.
what could be your message as a promoter? If you could share some thoughts.
Uh, well, the most important message is that we would like to take our shareholders along with us in this journey. As we are growing, we would like to have wealth creation for them as well. And since this is such a promising industry, we see an extremely bright future, not just for Kontor, for its shareholders as well.
Okay, fine. I think last question, Kananji, is that every business has got certain risk attached. Of course, now the industry is flourishing. There's no doubt about it. But as a promoter, when you all started, or even when you're doing business today, what's the single most risk which you think is very important for our business? And in terms of that risk, how do you manage to mitigate that risk? There must be some risk mitigation strategy which you must be following, on a regular basis. So if you could share your thoughts here.
So, Avinash ji, I'm sure you ask this question to every promoter who comes on board in this situation. But I think the single most factor that not just us, it's a very known factor. I think a situation like a pandemic is something which is the largest single most risk factor that we envisage, and that is something which is a global
Okay.
thing. So. I mean, that is the only real risk factor. Other than that, we don't see anything else affecting this particular industry. In fact, all the other factors are only pro it. And
Yeah.
especially in terms of, me talking about how we are looking at the tier 2 and tier 3 cities, especially Indore, Jaipur, those kind of markets have seen so much growth and so much new talent being hired by a lot of the multinationals. So those are the markets that we're also looking to focus on. So we're looking to spread our wings, not just, so currently, of course, we're in Maharashtra, but we're looking to spread out pan India, and we're looking at other micro markets as well. So, the fact that we are spreading ourselves out itself is a way of mitigating any risk. By that way, there's no major concentration of risk in any particular market, any particular place. Geographically, we are spreading ourselves.
So I think very well articulated, and I do agree with you that currently, except COVID, which was a one-time kind of abnormal kind of risk. Otherwise, this industry is well positioned for growth over the next 6 to 5 years. So I think your points were very precise and right. Kananji, thank you very much for the valuable time you spent with us today. It helped us understand the company better. And my best wishes to you, your entire management team, and best wishes for your forthcoming IPO. We believe it will be a good, strong success, and definitely we'd like to remain in touch with you over the longer term. Thank you.
Thank you so much, Avinash ji. Thank you.